buying begets buying. So when other traders and buyers see that SPUT is going to buy such a large volume and quantity, they can't ignore that and just sit on the sideline. And even yesterday, we heard that maybe a couple of European utilities were starting to also look for material in the market. So if we see more of that behavior where utilities get off the fence and say, okay, we need to go look after securing our needs, it could start to have a nice positive momentum effect in the market.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy, sell shares, products or services. Always do your due diligence and consult with your financial advisor. And my guest today is Amir Adnani, CEO for Uranium Energy Corp, UEC, and a known name in the uranium and nuclear energy industry. I am delighted to have him here. Amir, thank you very much for joining me today.
Lucian, it's a pleasure to be back inside the triangle.
Thank you very much. Amir, great timing for this interview. Positive news just keep on coming for the sector. The most recent is Sprott Physical Uranium Trust raising $200 million to invest in uranium, signaling strong market confidence in nuclear energy. My first question, how do you see this capital injection influencing the uranium market?
It's already had a nice impact. As you know, last Friday, the uranium market was quoted at $69 per pound. And last night, it closed at $75 per pound. I believe we saw TradeTech publish even at 76, which suggests there was a trade at $76 per pound. And today, it seems to be hanging around the $75 levels. Great to see a nice, meaningful upward move. However, we're going to see, I think, perhaps more of this move after Sprott has actually closed this offering. The offering doesn't close for a couple of more days, meaning that they're not technically, shouldn't be, I think. I mean, but we'll see in the market buying uranium. So we'll see when they do actually close, that's close to 2 million pounds worth of uranium that they've raised money for with this raise. And the market, I think, should continue to really benefit from not just this additional buying pressure that their raise will provide, but all the other positive news that we keep hearing about and seeing every day, it feels like. It is just unbelievable how exciting nuclear energy has become. And there's so much to cover and we can talk about, but the Sprott raise, I think, really probably helps bring a bit of life in the only aspect of this nuclear story that was a bit quiet, and it was the uranium market. It was quiet, hanging around $70 per pound, and perhaps some physical buyers were becoming complacent. And this probably will end that complacency. And maybe we thought we were going to have a slow uranium market going into the summer. It doesn't look like it's going to be the case. This might be a much more active summer with this raise, and buying begets buying. So when other traders and buyers see that SPUT is going to buy such a large volume and quantity, they can't ignore that and just sit on the sideline. And even yesterday, we heard that maybe a couple of European utilities were starting to also look for material in the market. So if we see more of that behavior where utilities get off the fence and say, okay, we need to go look after securing our needs, it could start to have a nice positive momentum effect in the market.
Yeah, all good points, Amir, and agreed 100%. Another ultra positive development with the US administration executive orders aiming to quadruple US nuclear capacity and strengthen the domestic uranium fuel cycle. How do you see this evolving next? And is this, Amir, is this realistic?
It's what arguably we've been waiting for decades. And it's very real. It's happening. We can talk about it and break it down in a number of ways, but I think we need to zoom out for a second and remember that for the longest time, nuclear energy did not benefit from bipartisan support in America. Today, not only do you have bipartisan support, Biden was also very pro-nuclear with his policies, so was Trump 1.0, and now so is Trump 2.0. And so the underlying foundational building block in all this, the executive orders, whatever we want to focus on, but the underlying foundational block is bipartisan support for growing nuclear energy. The second foundational block is a unanimous agreement that we must end our dependence on foreign imports in America, the ban on Russian uranium, which was unanimously passed through Congress, basically confirms that, and perhaps could be enlarged to include China in there as well. Third, we have the fact that big tech companies, the biggest companies in America, are voting with their wallets for nuclear energy. That's a game changer. And we're seeing this incredible increase in demand for electricity projected over the next decade. And so you have an alignment of stars for nuclear energy growth in the US like we have never seen before. And so when you then step in and look at these executive orders with these various building blocks that I just spoke to in mind, you realize that, no, these executive orders aren't just the president just saying something nice. No, these are very much connecting the dots between real demand from end users of energy, these hyperscalers or big technology companies and just big companies like the Amazons of the world who need this energy and are willing to pay for it. So it's connecting the dots. Every time, Lucian, I think policy comes out and is an exercise in connecting dots that already exist between bipartisan support and real industrial demand, those executive orders and policies actually have a better shot at becoming something rather than just something that we see for a week and then we forget about. And what I would draw your attention to isn't the quadrupling of nuclear energy by 2050. I would draw your attention to the expected targets for 2030, which is around the corner. Having 10 large reactors under construction by 2030, increasing the uprate of existing reactors, deploying SMRs. Companies like Oklo are talking about being operational by 2027, 2028. And so this in the nuclear industry is around the corner. And people say, well, what about natural gas? Well, look, natural gas will coexist with nuclear power. But if you want to order a gas turbine today, it's 5-year wait time. And so gas is not exactly as around the corner as we think it might be. There's supply chain bottlenecks also with increasing the gas-fired power capacity. And so for nuclear to potentially see large reactors under construction within the next few years, to see small and medium and advanced reactors get up and running, we're seeing incredible growth in that industry. These are all things that are extremely real, extremely valid. And nuclear is back in a big way. I think this is the golden age of nuclear in America, something those of us that have been believing in this for decades, like myself, 20 years of building UEC to be that domestic source of supply for uranium for exactly this type of day where we would finally have growth here. We didn't have growth in nuclear energy in the US since the end of the Cold War. And so this is really about 30-year cycles. And we didn't go through a 30-year cycle of dormancy to now have a couple of good years. This is about decades of growth coming in front of us, and I think it's very exciting.
Spot on, Amir. Let's touch a bit on market supply-demand dynamics. I remember in our prior interview, you've highlighted the significant supply deficit in the uranium market, with mines supplying only 75% of the demand in 2024. What factors do you see driving this imbalance in 2025, 2026, and beyond?
I think a big part of it is this continued underinvestment in new supply, greenfield new supply. So you look at the number of projects that have restarted, which are all brownfield. You look at the fact that the larger producers in the sector like Cameco and Kazatomprom are not currently commissioning new mines, new greenfield development. it's really unbelievable, because if this was the copper sector or oil and gas and you had a price incentive and price signal, everyone would be building new supply. And in uranium, that's not happening. I think that speaks to the difficulties of building new mines, especially greenfield. I think it speaks to the fact that, again, there are shortages of available labor, available supply chains. And so I think the biggest issue with supply demand is really the velocity at which supply can come online. I don't think demand growth is as challenged as supply side growth. And I think the best demonstration of that through data points is the following. For the 10 to 12 years following Fukushima in 2011, close to 70 new reactors were built and connected to the grid. For the period 12 years following Fukushima, no new uranium mine was built and added to the supply grid. And so the demand drivers for uranium, which are new nuclear generating capacity, are much more intact and happening globally, whereas the necessary foundation to really see supply side growth, especially from building new greenfield mines, is simply not there. We're not seeing that today. We didn't see it last year. And that confirms one thing and one thing only, that the uranium prices at 70 or 75 or 80 or 85 are inadequate and are not high enough to stimulate supply side growth. Supply side growth will happen. And so I don't think anyone should be worried about shortage of uranium, because ultimately the cure for this production gap, this production deficit, the cure is higher prices. And higher prices will cure that. But those higher prices are not 75 and 80, because we've witnessed 75 and 80 for over a year now. And it hasn't translated to new greenfield development.
Yeah, right. Amir, let's talk about UEC, your company, Uranium Energy Corp. Wyoming operation. USC not recently, but you restarted production at the Christensen Ranch mine and expanded the Irigaray plant's capacity to 4 million pounds U3O8 annually. Can you give me an update here? Were there any challenges during the restart, and what are your production targets for Wyoming in 2025 and 2026?
Yeah, and Lucian, we're so excited about this operating phase of the company that we've entered into since last August. And one thing that UEC has intentionally done quite different is this idea and this strategy of A, remaining unhedged, and B, making sure that the restart and the ramp up of production is as conservative as possible, and also not pressured by contracts that are breathing down your neck as you're trying to ramp up and build mines. And this is very distinct. You've seen some other examples of companies that have signed contracts, some companies that have had to cancel contracts because of difficulties with ramping up production. So when you see that, you can hopefully take notice of why the UEC strategy has been, again, a combination of being conservative and creating maximum flexibility for the operating teams to execute on a more conservative ramp-up schedule to build up the production. Also, we're not necessarily that keen to put too much new supply in the market when we look at a market that is at $70, $75 a pound, and we think is a real misrepresentation of where the prices should actually be once some of the procurement demand starts to kick into the market again. We've had a serious amount of policy paralysis in the uranium market over the last year that has really caused the slowdown in uranium market activity. This will pass. And so what we're really focused on is building our operating capacity, building up the production ramp, investing in our production readiness, and making sure the personnel, the workforce, the necessary supply chains, the necessary service providers are in place and operating and working and executing. And by the way, that will seriously set us apart and put us ahead of many companies that are pre-production, pre-licensed, pre-construction. You saw in our most latest update, we continue to execute on production milestones. Initial loading of uranium onto resin in December, delivery and execution of uranium, dried and drummed uranium concentrate in February, continued production growth with building new mine units at Christensen Ranch. We have our second mine at Burke Hollow under construction, looking to commission and bring that online later this year. The developments that we have in the Great Divide Basin now since our acquisition of Rio Tinto's assets, and the advancements we're making in Canada with our Roughrider project. UEC is a multi-project, multi-asset, multi-production center company. We have 3 production platforms between Irigaray, Sweetwater, and Hobson. So 3 hub and spoke production platforms with, as you know, the largest resource base in America, second largest in North America after Cameco, and the largest license capacity with 12 million pounds of annual license capacity in the US. The workforce over the last quarter grew to over 100 individuals between Wyoming and Texas, covering all operating aspects from metallurgy to operations to procurement to packaging to exploration to development to construction. So there's really proud of the way the team is growing and developing full scope, full cycle production capability. And in the coming quarters, you're going to see increasing amount of information and also production as we keep growing and grow into the production ramp up that we very conservatively have laid out. But the benefit of being unhedged can't be overstated, because what that means is that we sell uranium when we see the right market conditions, not when a utility sees the right market conditions for them. Meaning at any given point, we have the flexibility and option on behalf of our shareholders to execute sales opportunistically at our call rather than the other way around. And that's always been a very unique aspect of the UEC strategy.
Yeah, and really paid off so far for you, definitely. You mentioned Sweetwater acquisition. This acquisition has boosted, just like you said, U.S. licensed production capacity to over 12 million pounds of U3O8, making it the largest in the U.S. How do you plan to integrate and refurbish the facility to ISR processing? And what timeline are you targeting for operational readiness?
We're building a dedicated team and workforce at Sweetwater. That work commenced the day after we closed the acquisition from Rio Tinto. And that team building is coming together very nicely and very much on schedule. We're going to release SK 1300 resource report to make sure that the resources start to get advanced with new technical reports and information. We're working with our engineering team for some of the updates and upgrades and refurbishments that you touched on for the plant itself, and also starting to develop the timeline for initial production using in situ recovery, because that plant at Sweetwater will be capable ultimately to handle both ISR resin processing and conventional milling. And that'll be the only plant in the United States that has the capability for that dual exposure, but also because we've got the resource space that's half conventional, half ISR amenable in the Great Divide Basin that can be fed into the plant. So it's an incredible asset. We're excited about the fact that after decades of ownership of these assets, Rio Tinto and us were able to transact successfully to acquire these projects. And we could be in a position, Lucian, where production from Great Divide Basin could be within the next 3 to 4 years in the time horizon for us, which really, when you think about all the demand and demand growth coming in the US in particular, having that source of US origin, US produced uranium is highly strategic. And that's what we're noticing right now, is that we're noticing there's a real premium developing and emerging on US origin, US produced uranium. And there's a simple reason for that. If you have US origin uranium, you can sell that to the Department of Energy as they look to enlarge the strategic uranium reserve. You can sell that to the largest nuclear fleet on the planet, which is in the US, the 92 units operating. But also increasingly, you can sell to SMR companies like Bill Gates' TerraPower or Peter Thiel's Radiant, both of whom we've announced supply agreements with to make sure that that emerging demand from SMR world is being addressed, which we think it represents a huge business opportunity. Finally, let's not forget, there's a Section 232 investigation President Trump signed an executive order for, which may result in the same outcomes as the 2017 version of the Section 232, which recommended quotas on U.S. demand, meaning potentially 25% of U.S. demand may have to be met exclusively from domestic sources, and or potential enlargement of the strategic uranium reserve. This is a very important policy development that I don't think enough market participants are talking about, paying attention to. But if you've been around as long as we have, and you've been, and you know what happened in 2017, you know that in 2017, Department of Commerce recommended to the president at the time saying, there's a national security problem related to too much import of uranium into the US from Russia and other sources. And if you do the same math today, effectively 100% of nuclear fuel requirements, including uranium, are still being imported, which means the same national security concern would exist today as it did in 2017. So as you think about the Section 232 emerging, you look at the strategic uranium reserve, no other country on the planet is planning to build as many SMRs as the US is. No other country on the planet has as many data centers planned as the US, which means the energy demand growth here is unlike anywhere else. And all of this means domestic supply chains of anything that's critical infrastructure, anything that is considered a national or energy security matter, which uranium and nuclear fuel very much are. So this means US production will be very valuable and strategic, will be a premium priced product, more so than any other jurisdiction for those reasons. So with that in mind, it's one thing to consider what UEC did at the bottom of the cycle, which is to make over $1 billion of acquisitions of uranium projects and uranium. But Lucian, we acquired big boy assets. We acquired the assets of the Russian Federation, that was Uranium One, or Rio Tinto, one of the world's biggest miners. Acquiring big boy assets at the bottom of the cycle, and now having the benefit of the tailwinds supporting growth in nuclear energy in the US like we have never seen before.
Yeah, that was a perfect business move, and I have been following UEC from the beginning, and I really respect that part the most, buying real and excellent assets at the bottom of the market cycle. So congrats on that. Really, I want to ask you about Roughrider. Let's go a little bit to the north. The initial economic assessment for the Roughrider projects has post NPV of almost $950 million and 40% IRR. My question is, what are the next steps to advance this project forward, and how actually does this fit into UEC broader growth strategy?
Because of everything I just outlined about the importance of US production and the need for US production, our production growth plans for the next 4 years will be very US centric. It'll be growing the production in the Powder River Basin, bringing online Burke Hollow later this year in South Texas, developing Sweetwater, as I mentioned, to come online in the next 3 to 4 years. So much of our production growth will be focused on that 3 licensed facilities that we have in the US, the 12 million pounds of licensed capacity that we have in the US, and the over 300 million pounds of uranium resources we have within our hauling distance to those 3 plants. Roughrider is what we're planning for production 5 years from now. And so between now and then, the work happening at Roughrider, for example, in the next 12 months, is to complete a pre-feasibility study, to continue to de-risk and advance the project from an economic study point of view, commence some of the federal level permitting work that needs to occur there as well, alongside successful provincial level permitting we've already benefited from with the work Rio Tinto had done, which was the issuance of an ADEX, an Advanced Development Exploration Permit at the provincial level, which really means the company could do advanced development work even as of right now if it wanted to. But we want to continue to advance the project through the various economic studies. It'll be a wonderful asset to be production ready for us in 5 to 6 years from now as we do that. And that's the very unique position UEC is in. You look at a project like Roughrider, and Roughrider has world-class margins. Economic report that came out shows all-in sustaining costs of about $20 per pound. That makes Roughrider a top 5 project globally in terms of where we are on the cost curve. Situated on eastern side of Athabasca Basin, near infrastructure, near power, near roads, near air landing strips and mills. And despite all these world-class qualities that Roughrider has, we can afford to say that's a project we'll develop in 5 years. That's how deep and extensive the portfolio is at UEC, that you can even sequence a project like Roughrider to be part of your future development plans 5 years out. So that's really what we've assembled here, is a diversified, extensive portfolio of assets that gives you multiple ways of being able to achieve production growth. And let's not forget, the focus in the next 4 years is also on in situ recovery. Roughrider will be a conventional underground mine, which we're building the team and capabilities to do that in Saskatoon. But I really believe in the next 4 years, with all the challenges with ramping up uranium mining after a decade of dormancy, low capital intensity ISR projects that require a fraction of labor requirements of what conventional mining needs are much more advantageous to bring on. This is how the Kazakhs produce uranium and have become world leaders with the benefits of ISR production. We want to really capitalize on the same advantages. And in Wyoming and Texas, we have the benefit that ISR mining was invented in Wyoming and Texas. It's got a 40-plus year track record in Wyoming and Texas. So we're not doing anything new. We're not trying something that has untested risk associated with it. And those are the reasons why I think it's such a unique position to be in, to tackle ISR in Wyoming and Texas, the birthplace of ISR production, and benefit from low technical risk, low capital intensity, and lower labor requirements.
Yeah, Amir, I want to congratulate you on appointment as a new member of the World Nuclear Association Board of Management. And my question is, how do you plan to influence global nuclear fuel policies in your new role?
Well, listen, I'm an entrepreneur by background. And as you know, UEC over the last 20 years, since I founded the company, has tried to really come in and be a new source of sector leadership, thought leadership, and energy by being more entrepreneurial. The nuclear sector is comprised of many state-owned companies, and state-owned companies and their leadership might sometimes be slower or bureaucratic in the way they think. I think the World Nuclear Association has done an incredible job over the years in advocacy work for the industry globally. They do a tremendous job. You look at the result of it recently with the change at the World Bank. The World Bank finally lifted its moratorium on financing nuclear projects. You can thank the World Nuclear Association for that. They did incredible advocacy work for years to try to influence decisions like that and those outcomes for nuclear industry. But having said that, if we're going to triple nuclear power globally, which is a pledge at the global level, and that WNA is a part of, and we've had many signatories to that pledge, from banks to companies like Google, Amazon, and Microsoft. If we're going to triple nuclear power, we need to make sure that this industry is not just run by state-owned companies and or government bureaucracy. That's all fine and necessary, but we need new blood and new energy, and we need a lot more of the entrepreneurial interests and spirit that can then bring along with it capital markets, financing from banks. Public sector can't just be financing and building this tripling of nuclear energy. We need a private sector, public sector collaboration. And what I look to really do is to just really help drive forward this mission and goal that the WNA has so beautifully laid out there, which is the tripling of nuclear energy by 2050. I believe that our entire industry will will obviously benefit from this, but if we can all pull in the same direction and just be super sharp on this goal that says, guys, if we get there, we've done huge service to this planet. We've done huge service to the needs for clean baseload energy, which we badly need more and more of. But we've also done incredible things for our shareholders if we're in public company seats like I am. And so it's really making sure that we connect the dots and bring government, public sector, private sector, and entrepreneurs and everyone together to try to really get to this goal. And that's part of the focus that I'll have as a new board member of management for the World Nuclear Association.
That's great. Amir, final question. News flow from UEC, from the company. What can investors expect in the upcoming period?
A lot. We're going to have a lot of news coming into the second half of the year, and into September we'll have our quarterly, of course, production updates and results, which are always a very important way of staying on top of what and progress we're making and what kind of progress we're making. So I look forward to those. I think you're going to have to really sort of, I think, pay attention to that to get a really good sense of how great the progress is that we're making with the production ramp up. Second, the pre-feasibility study at Roughrider, hopefully the commissioning of Burke Hollow later this year and bringing that online, and just continued progress with our various projects across 4 different jurisdictions: South Texas, Great Divide Basin of Wyoming, Powder River Basin of Wyoming, and northern Saskatchewan in the Athabasca Basin.
Any M&A news?
We were, as a company, busier than any other company in the sector, large or small, when it came to acquisitions over the last 7 years, starting in even 2017, over the last 8 years when we did the Reno Creek deal. I really feel, and when you look at the amount of acquisitions we did, we've got a tremendous portfolio. As I mentioned, largest in the US, second largest in North America, only after Cameco. And so what that means is we're now more and 100% focused on operations, building up the operating capability, advancing the operational targets and milestones. And that's where we need to be, because at the end of the day, you can't just be making acquisitions. There's a time to make acquisitions, and the time was at the bottom of the cycle. We're benefiting today from acquisitions we made when uranium was at $30 a pound, $20 a pound. But now uranium is $75, and it could be back over $100 quickly. Now's the time to be focused on operations, and the uranium price is always the what we get our cue from. And in this price range, the cue is operational focus.
Great overview, and I wish you luck with all that. That was Amir Adnani, CEO for Uranium Energy Corp. Amir, thank you very much for coming to my show.
My pleasure. Thanks for having me back.